Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into these topics, sectors, looking for investment opportunities and sharing those opportunities with everyone in the community. I do that through midweek updates. I do that through Q&A sessions on the weekend where you can interact with me directly through a Zoom call. We've got special as a coupon code that is active right now. It's $25 for the first month only on the monthly membership, which is a 50% discount. Or you can sign up to the yearly membership, which is a $100 discount, $500 a year. And you can always swap from the monthly to the yearly membership if that's what you'd like to do. So you could try it out on the monthly and then swap to the yearly the month after if you want to do that using that same special coupon code. Sam says energy stocks are resolving a massive base versus crude oil. Do you know when that occurs? That occurs in a bull market, not a bear market. Bear markets are when they peak and go lower. Bull markets is when they bottom, like say in 2020, and they go up. Equities outperform in bull markets, not bear markets. I pulled this up just because I don't know what he means by energy stocks. It was kind of cut off there a little bit. Oh, I guess it's RSPG. XOP versus crude oil looks pretty dang good. This was the last bull market coming back here. Well, actually, it's off the chart. The last bull market was back there. But we bottomed here in October of 2020. That's when a lot of the charts were bottoming. That I purchased was the exact month, October of 2020. We've been heading higher. We've had a ascending triangle, which you get resistance through here, and then the lows keep coming on up. That's called an ascending triangle, and we have broken that ascending triangle to the upside. That's bullish. That is not a bearish formation. So I understand a lot of people on Twitter, they're calling for lower oil prices and that oil is not the spot to be. Well, I disagree. I think oil looks incredibly good. I think the equities are not following oil and they're breaking higher because we're in a commodity bull market. That's what it looks like. This is what it feels like. A bear market is when the equities lead to the downside. A bull market is when the equities lead to the upside. Copper miners are quietly coiling up for a generational breakout. Copper miners, they also bottomed in 2020. But here it is, the 2011 peak breakout. I think he's got that going all the way back over here that you can't see. And we're just coiled up right underneath that resistance. I like looking at it perhaps from this perspective. You can zoom out. This is the full cycle. This is what a cycle looks like. Your down cycle is your falling wedge, which is that's the down cycle. You get a sideways basing pattern. That's this guy here of the double bottom. Then you break out of the base. You move upward. We had a consolidation on top of it, and we've broken to the upside. Now we've got a short pause right before we make all-time highs going back to 2011. I think it's all-time highs. I don't know what. I would assume that this came up and came up here. I don't know where the ultimate high was in 2008 for COPX because it didn't exist back then. But we're going to try to break and make new all-time highs there. That's the cycle. The way that you build conviction is understanding these cycles. And the double bottom, this is generally the best time to buy. And we have, there are companies that are in this location, but you know what? it's not for those that are, it's not for the faint of heart. I mean, you gotta be able to have the cojones to buy and hold, because sometimes these drag out. Sometimes they do this, and then they start to go up. They chop sideways for a year or two. You kind of have to know the cycle and just believe in the cycle, have conviction in that cycle. And a lot of the times when you're in this big basing pattern, the big B down there, your valuations are very cheap. Your sector fundamentals are very cheap, like a copper to gold ratio and stuff like that. And you know what's this is what's really interesting here. Copper's on the equity side is trying to break out here, and we've got copper in relationship to gold at basically an all-time low. So try to make that work in your head. And this is how you have to view the markets. You have to view the markets like, well, how much runway does not just the companies have in terms of valuation metrics, but also the sector fundamentals. If we're down here and we were to get another large surge up to this upper area, this, we'll call it that box up there. I mean, you've got one heck of a price appreciation move in the equities, because this would be an absolute astronomical move against gold. We can get a rough area here. It's going to outperform gold by about 4x. We'll call it a 4x outperforming move against gold. So it would be 4x of the metal, but in terms of the equities, that could be an 8 or 10x, easy. It might even be a 12 or 20x, depending on the company. And that's how I view the markets. I just look for things that are cheap, look for things in a falling wedge like this, and then you look for, does copper look like it's trying to break out? And it is. This looks absolutely, completely fantastic. Now, if someone said, well, what if recession comes? Well, I don't know what to tell you guys. You can always what if. You can always what if whatever you want. But this looks primed and ready to go. And if something were to come out of left field and push it lower, then I'm going to ride through it. And that's kind of the mental fortitude and strength that you have to have. It's not going to disrupt it forever. It could temporarily disrupt it. 2008 was a pretty nasty move, but that was towards the end of a peak. Where we are located is right in here, where we're starting to break through this resistance. So that is all the same. That circle is where the circle is. And then you've got 1 and 2 is these two here. Then you've got 1, 2, 3 hump consolidation, 1, 2, 3 hump consolidation. And then you've got the break. The circle's where the circle is. It's the same thing that oil's going through. Copper's going through it. Gold's our leader. Gold's already ripped to the moon here. This is what's going to come next in copper. That's what's going to come next in oil. China is making a lot of progress in the electric vehicles front. You can dislike China and EVs, but this is a fact. This reduces China's reliance on oil in the long run. I don't think so. Is pretty much in everything. Now, it might reduce the reliance on transportation, but oil's in everything. It's drenched. These electric vehicles are drenched in oil. So you might say that the pace that we consume oil may temporarily slow, maybe. But the whole world is trying to become richer. And I don't believe that oil is going to go down. I think demand for oil will go up for the rest of our lives until we hit supply constraints. That's what I ultimately think. And that electric vehicles and solar and all this other things, they'll just all be added on top of demand. And we'll just keep piling it on. Humans' wants, needs, desires to be wealthy is going to trump any sort of demand destruction type, supply destruction as well as demand destruction. I think we'll just burn everything we've got. That's what I think. It says, why are you going to lose money on stocks this decade? So legendary Howard Marks puts it bluntly. When you buy the S&P 500 at the 23 times price to earnings ratio, your 10-year annualized return has always fallen between plus 2% and minus 2% in every case. Every case. Today, the market sits at 25 times PE. Add inflation and your returns are negative. So what is Mark doing? He's buying bonds. During the 2000 to 2002 crash, long-term treasuries were plus 40 to 45%, and the Nasdaq was minus 78%. History doesn't repeat perfectly, but it rhymes. We might only be in the first inning of the next pullback. I'm already reallocating heavily into long-term bonds, ETFs like TLT and ZFL.TO, and I think they'll outperform for years. See, this is where the big question mark is. Are we going to have inflation or is it going to be deflation? Now, the last crash, 2000 to 2002, people ran into bonds. Now, if we've got massive inflation, we would see bond prices go down and interest rates go up. So he's betting on TLT going up, which means that like the 10-year and the 30-year will go down. He's betting this is going to break lower. That's what his guess is. And that could be the case. We could be in an uptrend in yields where we've broken out of the 40-something year downtrend, and that we are going to, in the short term, do this before we go up. We could easily do that. Not saying that we can't, as this tries to come up. So that's his opinion. And perhaps he's right, perhaps he's not. I would actually, let's look at TLT, which is bond prices. I don't think TLT looks that great, but that's me. I'm not too bullish on bonds here. So that's TLT there. So what this is, if you were to really break this down, is this is a descending triangle. Ascending triangles look like this. Descending triangles look like that. And we've got a descending triangle potentially. We'll see how this plays out. I'm not a bull at all. Zero bull in TLT. I am a major bull in gold and silver. So if I were to play this, if I were to go against Howard Marks, who's an incredible investor, and he said, we could get a slowdown, I would be playing it with gold and silver, which I am, instead of bonds. And the only reason I say I would be doing that is because we've broken the uptrend in bonds and we've broken the downtrend in yields. So I would not be playing it the way that he is playing it. I would play it with gold and silver instead. That's what I would do. The U.S. energy sector has been left in the dust. The energy sector now represents just 2.6% of the S&P 500, near all-time lows. Since the 2008 financial crisis, its weight has fallen minus 13 percentage points. By comparison, the energy sector made up 26% of the entire index back in the early 1980s. To put this into perspective, NVIDIA alone reflects 8.5% of the S&P's 500's market value. This means NVIDIA itself is now 3 times larger than the 22 energy stocks included in the sector combined. Will the AI revolution revive America's energy sector? This is bottomed, in my opinion, and I would be a major allocator of energy down here because I think the cycle's turned. And the reason I think the cycle's turned is because the 10-year yield has turned. Bond prices are in a downtrend. We are going into an increasing interest rate environment, which energy does very well under, as does precious metals. And I think eventually the stock market, Nasdaq, will roll over, just like Howard Marks was talking about above, because of the valuations being overvalued. So I agree with a lot. I just disagree maybe with how some people are playing it. That's all. Doesn't mean I'm right, doesn't mean they're right either. This looks very good. It's very, very cheap. Navi says perhaps the most notable observation of today's sell off is that neither the US dollar nor treasuries rallied as they typically would. And that is the observation that I have. When you get a sell off, what does the dollar do and what do yields do? If yields drop and the dollar drops, let me see what they're doing today. I don't know. See how the dollar is going up and yields are going up? Yields going up. They want to break higher. I think Howard Marks is going to be wrong. I really do. I think he's going to be wrong here in the short term. And and that could turn into the long term too. And the reason I would buy gold and silver is because of this very reason here. I think rates could go higher. And rates going higher means he is wrong, that bond prices will go down. So I think that stocks and bonds can go down simultaneously, and that precious metals and commodities are going to rip. That's what I think. I also think that emerging markets are going to rip. I mean, rip. Last time we bottomed like this, just like we are today, this was the spot to be. It did a 20x from bottom to top in some of these emerging markets. 20x. So if someone said, hey, are we late to this game? No, you're still early, guys. But you don't have a ton of time if you want to try to get a 20x. You got to get in, buy it, and just sit and do nothing. A lot of people that they have the inability to hold. You got to be able to hold this stuff if you want the returns. You got to get in early. You got to buy and just hold. And that's exactly what I'm doing. Getting in there, buying it, and I'm holding. A lot of people, they get scared with price volatility. Prices go down. Oh, it's bad. Why is it going down? Prices go up. Oh, it's amazing. Why is it going up? Sometimes things go down. Sometimes things go up. That's what markets do. They're very, very emotional. You got to separate your emotions, use logic, find these entry points that are cheap historically and take advantage of it. It doesn't mean you put all your money into it. It means you take an allocation, put an allocation to it, large enough where it could make a difference, and small enough where it won't kill you with volatility. Then you ride it. Then you got to get the cojones to ride it. Oil divided by the S&P 500 is at the same level in 98 and 2020. In both cases, oil massively outperformed the S&P 500 afterwards. What's the similarity? Well, 98, the dot-com bubble sucked all liquidity out of the market. 2020, oil went negative. Today, AI is absorbing all liquidity while trade wars spread uncertainty. At extremes, you want to rotate out of hype and into hate. Completely agree with that. There's your bottom, guys. This is your opportunity. Well, what if there's an opportunity cost? God, I hate that. I hate that answer, guys. Your opportunity is rooted in value, not in price. So let's just say this too. If that was right, if you could use charts and make a bunch of money, then where are all the billionaires that are chartists? Where are all the billionaires that are value investors? Wait, that's like all of them almost. It's the majority of billionaires out there. I would say this: most of the billionaires, and this is going to be my opinion, most of the billionaires were in the right sector at the right time during certain market conditions. And the market conditions became tailwinds for the companies that they owned, like technology stocks today, and we're at the top of this bubble. So all of those guys had all the tailwinds. Mark Zuckerberg, Bezos, Elon Musk, et cetera, et cetera, et cetera. Now, I'm not saying that they're not incredible people, but they had all the tailwinds in those sectors. Now, the tailwinds are shifting. And I think that the tailwinds are going to be behind the guys that own the big mines in the world of what's left. I don't think there's a bunch of big mines left. I think that things are going to get real scarce here. And this is all going to change. It's going to change in a way that people cannot fathom today. And over the next 20 years, the tailwinds will be behind other people. That's what I think. Here's another one from a guy name I can't pronounce. This is likely to be next year's trade. Long commodities, short the Nasdaq. I agree. Nasdaq 100 relative to commodities. Look where it's priced all the way up here. Bubble for Nasdaq, lows for commodities. Correct. And the relative strength is diverging in a bearish fashion. Brady says Palladium has an enormous 40-year parabolic base in the making. Another 21x move looks very likely. Should outperform even silver. The commodities bull is a true get out of the rat race opportunity. Said Palladium was bottoming in the link post below. It sure was. Been posting that platinum and palladium were about to move big, and now they are. PGM bull market has now started, and it will be a complete animal. Many have and will wake up to platinum and palladium, but go with us. I've played these sectors for decades. We bought the crap out of platinum. Palladium, I think, will go up too. I like platinum the most. But there it is. He's calling for another 2,118% move for a third wave up move in palladium. Looking good, looking good. And I'm playing it too. I like platinum. I like palladium. I'm playing these whole things. I'm playing it all. And that's it. That's all I've got for today. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got a Q&A session coming up at 5 p.m. Mountain Time on Sunday. See you there. Talk about all this information. All right, guys. That's all I've got. See ya.